Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Randy Langenderfer. Thanks for being on the show, Randy.
It's my pleasure, Whitney. Good to talk to you again.
Yeah, you as well. I know I enjoyed getting to meet you, and I know we had a meal together in a mastermind that we're both in, and it was great. Anyway, just enjoyed our conversation and looking forward to our conversation today. So, but Randy, a little about Randy, if you don't know who he is, he's a longtime real estate investor and resides in Houston, Texas. He started as a hard money lender doing single family flips, has been in multifamily for the last 5.5 years, and is currently involved in over 2,400 doors as an LP or GP. He has completed the full cycle on 4 properties, and his first property as a GP just went full cycle, returning 1.9x to investors in 21 months. So that's pretty good, Randy. Can't complain with that at all. But yeah, tell the listeners a little more about who you are, and let's dive in.
Thanks, Whitney. I currently reside in Houston, Texas, but have to tell people that I'm a lifelong Buckeye. So if I can see behind me there, the big horseshoe, proud Buckeye, currently living in Houston, Texas, and came here about 7 years ago for business purposes, relocated after being in Ohio most of my life. And I started single family flipping and came to Houston really excited about the 4th largest metro area in the U.S., thinking I could kill it down here, and got started in a couple of the different mentoring groups down here and meetups at the time. Found that I got connected with multifamily, and soon after I got down here, about 6 months, 7 months, and really have never looked back. I just enjoy it. It's a great asset class. I'm a big believer in it. It's a lot less labor intensive than is single family. And so I've got involved, I started investing passively in real estate deals to learn, because I was one of those stubborn ones that wanted to see it and touch it and analyze it before I really threw a whole lot of my money down. And then about 2 years ago, we signed up for our first GP, as you mentioned, and can talk more about that. But it's just been a lot of fun. I really enjoy it, and I'm looking forward to continuing to do this for a long time.
Nice. Maybe you could elaborate on a little bit about the starting in this business by investing passively and how that helped you, or would you recommend it?
Yeah, so I think, everybody's why they do this is different. And I first got started because I was looking for starting to plan my retirement and wanted a job I really didn't, or a passion. Jobs are sometimes considered negatively. I still enjoy mine, but I'm still working. But I got involved because I was looking to complement my retirement, and I wanted something to do in retirement. So I joined a couple of the big mentor groups and decided that I was going to learn from people going through it. And so I did that. I got involved with the Lifestyles group here in Houston for a while, the Sumrock group in Dallas, and then you and I are both in the Khalif Mastermind today and enjoying those. But I just simply said I wasn't going to, I was kind of stubborn. I wasn't going to pay large sums of money to just get involved. So I was willing to pay money to learn and have others teach me along the way. So I got connected with a couple of different sponsors that were willing to spend some time with me. And, I think the best thing I can encourage people to do is, I've learned over the years that there's really no such thing as a passive investment. I think one of my mentors told me, be an active, passive investor. Ask questions. Don't be a nuisance, but ask questions. Get involved in the numbers if you want to learn the business. I mean, if you truly just want to just put your money at something, this is a great asset class to do that as well.
Couldn't agree more that there's no investment that's completely passive. I mean, in real estate anyway, that I know of, even if some more passive than others, right? But
yeah.
But ask questions and because you're still in control of, where you're putting your money in. And if you don't ask questions,
it's surprising, as you know, the number of investors after being on the GP side that you don't hear from at all. Right. And that's okay.
Yeah.
That's if that's their business plan. But maybe I'm just I'm a finance accounting person at heart and want to understand the numbers and the deal flow and the pluses and the minuses. Not all of them work out wonderful, but the vast majority of them do. So yeah, just, and especially I'm a coach for Khalief's group today, Rod Khalief's group, and you see these a lot of the younger people coming in, or new people, but not always young, but new people coming in that just want to get rich quick, I'll say. And so that can happen, but it doesn't always happen. So
right. So you had a deal, Randy, that you had some property management issues. Is that right?
Yeah. So I mentioned the first GP deal. It was something that basically I had some mentor friends tell me, Randy, don't do that. And being the stubborn one, I did it anyhow with a couple of partners. And the city was Beaumont, Texas, which is about 150 miles east of Houston on I-10 between here and Lake Charles. A 1965 build, 139 units, flat roofs, chillers, and boilers. And my friend said, don't do a chiller boiler and don't do a flat roof. And so we took over the property in about January of 18, and we're all excited and gung-ho and had a strategy to raise rents. We bought it very well. We were fortunate enough to buy it very well, and started raising rents. And literally, if you've been in this, all the mentors, coaches will tell you that sooner or later somebody's going to die in your property or there's going to be a fire. Well, 2 months into it, we had a fire. We lost a building, 8 units out of 139, taken down to the studs. And so we had those challenges abound, rebuilding, working through contractors. We were trying to save money, so we were serving as the general. We were hiring construction people, working through the timing, working with the property management company. About the same time, we had realized that the property management company we had was really not well suited. They were more of a HOA property manager than a multifamily property manager. And we ended up changing property management companies, and got a new on-site property manager, and was working through training her. She didn't have multifamily experience. She had commercial real estate experience. Great person, very tenant friendly and communication wise. So it was just a really great education to learn from the financial side too. When you have a fire, we had all the proper insurance, we had loss of rents, we had property casualty, et cetera. So we were well protected, but you learn very quickly that those rental reimbursements come months later. And so you have to plan for the cash flow to rebuild and then get reimbursed by the builder. And that can create a real hardship on the property finances that we learned as well while we were going through a property management change, et cetera. We were fortunate enough to be able to get reimbursed at the end. So we had investor questions because we weren't paying distributions for about 6-9 months. We made our first distribution at the end of the first year, and it was less than anticipated. So we got to answer all those questions, which were very fun, I'll say, sarcastically. So it was just a wealth of an education. The thing that we're happy to say, though, is you kind of said in the opening comments, we bought it we closed in January 18. We sold it in October of 19, just a couple months ago. We're able to return 1.9x to the investors. So for every dollar they invested, they got $1.90 back. And I got to tell you, Whitney, there was a time there when I was wondering if that was ever going to happen early on in the project. But we're real happy that it worked out in the end.
So obviously numerous questions I've got for you, but
okay.
I think a lot of people would have said, wait a minute, you made a big, if you didn't tell us about the 1.9x, a lot of people would have said, well, that was a big mistake. You didn't listen to all those mentors, those people that were saying, don't do that, in the very beginning. Well, what do you say to that now?
Yeah, I mean, I would personally today say I will not invest in a chiller boiler property myself. That doesn't mean, but those are big value add opportunities too. It's just that they become very capital intensive, and so we had gone in with our business plan to replace boilers, one chiller, 2 chillers, 2 boilers, and upgrade some roofs. And So 1965 build, it's 50-year-old asset, chiller boiler. We bought it very well, is the bottom line, at a time when it was not being well marketed and the broker was fairly incompetent. And so I would tell people, just make sure you know what you're getting into. I don't say no to those. I personally won't invest in one, but that doesn't mean there's not a lot of value add opportunity there, as long as your CapEx budget is well planned for and can handle it, as well as, the heat in Texas. If a chiller goes out in the middle of the summer, the heat in Texas can be brutal if you don't have air conditioning in apartments. And so thankfully we never had that. We were able to manage the downtime of those units in the winter and in the summer, but it just becomes a lot of work when we didn't have a functioning property manager compounded with that.
Yeah. So, you mentioned that you didn't pay distributions for 6 to 9 months. What was the distribution plan? Say before, when you closed, what was the distribution plan?
So we had targeted, I think it was either 9.9 or even 10% for year one. And we ended up, it wasn't, if I said 6 and 9 months, it was actually like in the 11th month, we finally made a distribution, and it was 5.5% of what we made. And so I think our investors were fairly understanding, given the fire, given the issues that we had communicated. So you also learn a lot about investor communications along the way. Generally speaking, you need to tell bad news early to investors and need to explain the business plan of how you're going to get it back on track. That's not a fun conversation, but it's essential. And I think, again, fast forward to the current, I think those investors will come back on our next project because they've seen how we handle that. And I've been in projects where that isn't always the case. That communication isn't always as effective because nobody likes to give bad news.
Right. So you close, and then 2 months later, you have this fire. Tell me, what was the way that you reached out to investors, and let's talk about those conversations a little bit.
Yeah, that's a call I hope that nobody on your podcast ever gets. I'm sitting in my office, and I get a call from the property manager that says, "Randy, the building's on fire." Which I thought it was a practical joke, but they sent me the picture of the news media that had come on site, because the news media jumps all over that in a smaller community and disabling the tenants, et cetera. So it was really just a matter of, first and foremost, you're always looking for the tenant safety, right? You want to get them stabilized. Thank goodness it was only 8 units of 139 that were displaced. So property management, us, got American Red Cross out there, got people displaced, put them in hotels. We actually paid for a couple of nights. But, they got to get all their stuff out of the units in time to rebuild. So it's first and foremost, the tenant safety is the issue you want to talk about and make sure you get covered. Because the investors, though they're investors, they truly want to know that too. We were really thankful nobody was injured or killed in a fire because we had a lot of old tenants. And so it's really just developing that communication plan. We're sending a URL out to the investors with the video from the local news media showing flames coming through the roof and out the window. So we're not trying to underestimate it. We're trying to communicate that nobody is injured, thank goodness. Thirdly, that we have appropriate insurance for this type of event. It wasn't totally unplanned for. And then it's just a matter of starting the rebuild, putting Humpty Dumpty back together again is the challenge.
Were the investors expecting a quarterly distribution?
That's the way we had promoted it early. And so month 2, we didn't even get to the first quarter end before we had bad news and had to say, it's not going to happen quarter 1. We're still, we're still optimistic and bullish on this asset, but we've had some body blows given to us.
Yeah. Yeah. And tell me about, some of the investors' responses.
I think we try to take a very active approach. So, the ones I brought in, I actually got, before the email actually went out to the investors, I got on the phone and I called them.
Nice.
To talk to them. So trying to make it more of a personal touch than just an email and telling them what happened and what's going to be forthcoming, et cetera. By and large, the vast majority of them were very understanding. I think there were a couple that really wanted to know how it affects the distributions. And at that point in the cycle, you're really not able to predict that with any accuracy, because you're not, what we've subsequently learned, and Whitney, is you're not going to get reimbursed from insurance until it's actually rebuilt and released up. And so that's at least, an optimistic 7-8. For us, it was 9 months.
Okay, so here's the simple truth. If you don't have private investors waiting on the sidelines right now, you're going to have a hard time closing your next syndication. Are you afraid to talk to investors? Do you feel you have a lack of credibility, or no one will take you seriously? Or what about your systems? Do you have anything set up yet? Well, if you know you can improve on getting in front of and influencing passive investors, then you should call my friend Adam Adams. Adam has a proven system for you to flip the script. Now, this is a 5-figure investment for you to take your business to the next level. I want to see you succeed, so I placed a link in the show notes for you to apply to work with the Adam Adams. And if you think you qualify and you know you're going to take action on what he teaches you, then scroll down, find the link, and take your money-raising abilities to the next level. Wow. Yeah. No, that alone is a great point that you just made from insurance, or about, that you're not going to get that money until it's built. You feel like, and maybe that's not always the case, but there are times, and that is a great discussion you need to have with your insurance provider before you close, right? Or before you use that insurance providers. How's the funding going to work when there's a fire?
Yeah, and do you have, this had multiple buildings on it. So the other lesson learned that I learned going through this is, do you have deductibles in every building or the overall property? Because some people will try to sell you a great premium by giving you a deductible per building versus the overall property. And if you had a fire on multiple buildings, that could put a world of hurt on your cash flow.
Yes.
You have a $10,000 deductible per building versus per property.
So or what was maybe the worst response from an investor that you received?
Worst response, and it really was fairly mild in terms of really angry, but just really frustrated, and what happened and why did it happen, and did you do your job? In retrospect, we find out that the cause of the fire was from a tenant who had a barbecue pit on their balcony. Why, pray tell, does the property manager firm let them have that? So that was an immediate fix. Another lesson learned is to make sure that all of your tenants, and we required it thereafter, is that all of your tenants have renter's insurance, so that you're not totally on the hook as the property man or as the asset manager. They have, a recourse to go back to their personal, and that can be gotten for pennies on the dollar from a tenant perspective. They can get it from any one of their auto brokers or anybody. And we had agents that would come forth as well to sell them to them going forward. So that became another trigger point going forward, is you have to have, as part of the tenant profiling or onboarding, is you got to have proof of renter insurance.
Wow. No, that's some great points right there. For what you had to pay for hotel and displacing tenants and all that, you could almost paid for probably renter's insurance, for everybody. It's really cheap, right? I mean,
it is.
Renter's insurance is so cheap. And you can probably find a provider who, you can, have it in-house almost, or kind of tell tenants, we've got this person or this provider. And
it's certainly worth looking into, depending on what geographic area you are in the country, but it's certainly worth looking into. And the other thing is just the way I learned in that is just from a liability perspective, the tenant drives their car into your unit. Renter's insurance will cover that. That didn't happen to me, but I know it's happened to other syndicators that I talked to. Just freak accidents like that.
Yeah. Did you all have a reserve budget or a reserve account?
Yes, we did. Thank goodness. We did have a capital reserve account, but and we were also, it's interesting. We had just, during our rehab, I mentioned we were replacing roofs. So we had just replaced the roof of the building that caught fire. Okay. It had fire coming through it. So we got to replace it again. But thank goodness it was covered by insurance.
Wow. Okay. And then, so what would have happened if you didn't have that reserve budget?
Man,
Yeah.
I don't even want to think about that, Whitney.
Yeah.
I'm
You
assuming.
don't even have to say it, but everybody knows,
Yeah.
And I want to ask that just so like the listener and all of us can really think through that, because, and I've heard it too many times that, well, if you have too large of a reserve budget, it hurts our numbers. And I'm like, oh, wait a minute, it's such a must, that you have a reserve budget.
And really, I mean, we're 2 months into it, so our reserve budget is pretty small. At that time, the thing we had going for us is we had CapEx dollars for the rehab that we were able to divert to some of this. But at that point, we had a pretty small reserve budget.
Yeah, and I want a reserve budget when we close. Like we're going to raise, a chunk of we're going to raise the reserve budget so that way we've got it if this happens in month 2, But to elaborate on this, the property management issues a little bit, or what happened with that? I know there was a big problem there.
Well, it was the source of real frustration. So my partners had another property in Beaumont that they used this property management firm, and they had this property that we were buying, and both in Beaumont, Texas. And so we were comfortable with the firm. They had, on this other property, they had a stellar on-site property manager that was just a super rock star. And on the one we purchased, they had a on-site property manager that had literally lived in the building for 25 years there, since it had been built, and raised her family there. And the children were now grown and raised, and a lovely, lovely woman, but they hadn't raised rents in years, and that was obvious. And so she was going to have a real hard time doing that business plan that we had identified of raising rents and making capital improvements to property. So we had to release her, regrettably. Wonderful woman, but I think she at the end realized, it was mutual, that she didn't want to be there and have to tell all of her friends to raise rents. And so we found another candidate, lovely woman who, like I said, had some commercial real estate, multifamily, heart of gold, a really great work ethic, great communicator with the residents, set in tone. But she just didn't really have any of the property management stuff. And so I was literally serving as the regional manager on the property for many months. I said I got my honorary PhD degree in property management from the School of Hard Knocks by doing this, setting rent gross every month, working on maintenance schedules, working with contractors to make the initial rehab budget, and also the fire there. And I was probably literally spending 10 to 15 hours a week minimum on this property for about 6-8 months as I would call it the regional manager. And I'm not complaining, because like I said, I got a wealth of an education that's been something you never want to repeat, though. It's one of those experiences in life.
Now that you know how it turned out, right?
Yeah.
Yeah.
And and as I said, when as syndicators and other people are looking for deals, that's one of the big questions I ask now. So what's the relationship between the sponsorship group and the property management group? So have they worked together before? Is that property management group proficient in that submarket? If it's a B property, are they doing B properties or C properties? Or are they only doing A's? You have a multi-million-dollar asset that really, you have a 40 or 50, maybe $50,000 employee really there, boots on the ground every day. And they're the ones that are really key in terms of tenant relationships, implementing the business plan that the new owners want to achieve. And you just can't appreciate it until you've had a bad one.
Yeah, and I think that's a great question that you just highlighted there, because I don't know that I've heard that before. As far as asking, has the operator and the property management company worked together before? It's a great question. Most people, I don't think that I've heard that. People talk about asking that before. So right. I'm glad you brought that up, because it is important. It is important. I mean, how well am I going to know my property management company if I haven't worked with them before, as opposed to if I have on numerous deals?
And it's not a red flag if they haven't worked together before, because maybe they're in a new market or something. But what's the property management's track record, in that asset class, in that very niche location?
Right. Especially if we're doing 5 properties rehab
across the door. Yeah.
It's going to be nice if we've done that with this management company numerous times, right? Or at least once before. Yeah. But no, that's awesome. Well, Randy, before we run out of time, I want to get to a few other questions, and we better move on. But
sorry,
no, this is great content, really good. But what's been the hardest part of this syndication journey for you, Randy?
I think the hardest part is I'm kind of I'm an analytical type. So I'm sure you've heard the ready, aim, fire illustration. I'm a ready, aim, fire guy. But once you pull that trigger, I'm all in now. And I'm really, the hardest thing for me was writing that first check. But really glad I did so.
And how are you preparing for this potential downturn that everyone's talking about?
Yeah, that's a great question. I personally have a lot of cash on the sidelines waiting for a deal, and I think that I'm not in any urgency to do a deal unless I'm just really comfortable with it. Because you're going to have to explain that to investors because everybody anticipates that, whether it's 6 months or another 3 years, we don't know. But you really have to be able to explain that. So the underwriting has got to be really well defined, articulate, and anticipating something like that. I mean, can you still make money at, I don't know, 85% occupancy or something like that? Or if rents, you can't grow rents, are they going to stabilize, maybe even decline? You have to be able to begin to forecast that. In some parts of the country are going to be harder hit than others.
No, that's awesome. Great points right there. Great questions that we should be asking if we're investing with somebody. So what's a way that you've recently improved your syndication business that we could apply to ours?
I'm really kind of returning to basics. So I've, I guess I told you I still work and I'm passive as well as a general practice partner. But so I'm going back and doubling down with all the investors now and reaching out to them personally, especially over the holidays, talking to them, not just emails, but talking to them, making an appointment. If they're in the local market, grab a cup of coffee, continue to building relationships. It's a team sport, as you know. Building relationships with brokers, especially in the local markets I want to be in, to identify properties. They're key, as you know, to have that relationship with. Honing some of the website development and some of the tools along the way, as well as who's really a good partner. And so making sure you're equally yoked, that you have somebody that is like-minded and has the same objectives that you do.
Many great points there, Randy. In going through the experience that you had there, I ask most people this, but especially since with your experience with the fire and dealing with investors, through that, what's your best advice for caring for investors so they want to come back to the next deal?
Well, I think you got different kinds of investors, right? Everybody does. I have a couple of them that are ultra wealthy. Some of them are very modest as well. And so it's treating them like you want to be treated. I personally prefer human contact with a voice or a video chat or something to catch up and let them know what we're doing, as well as to keeping them. So I think in that example, I've gained a trust of some having weathered the storm, but I think it's staying in touch and letting them know that, hey, I may not contact you every month because I got nothing going on because the market's really tight and I'm not going to bug you unless I got something really good to share. But please, hope you're still on the list and checking in periodically. And I just prefer getting on the line and talking to somebody and treating them all the same. So you have ultra wealthy, you have some modestly, it's treating them all the same. Even the person that put, $50,000 or $20,000 in your deal, as well as the person that put $300K in your deal.
Yeah.
It's easy to reach out to the high net worth individual, but that other investor, as the one more modestly, will make returns and come back too. And they'll have more if you're successful.
And it's easy to reach out when things are going good.
Yeah. Very true.
But I think, what you did through that deal, reaching out to investors, when the fire happened, all that stuff. And then even, especially the way the returns ended up happening. I mean, I just think you built some solid relationships there, and how that was handled, where initially they may have been very worried, but I think on the end now it's like, okay, you built some levels of trust there that may take other people many deals.
Well, I wouldn't wish that anybody'd have to go through that, but I hope you're right. I hope you're right as the next deal comes along.
So what's the number one thing that's contributed to your success?
Number one thing that's contributed to my success, I'd like to say persistence and education. So I think for the newer listeners, really encourage you to get involved in some, whether it's the local meetups in your area, your city, wherever you're at, or some of the national mentoring groups. I found that, and a lot of us invest tens of thousands, hundreds of thousands of dollars possibly in our college education. And so I think people should be willing to invest in their real estate education unless they're already in the business or gained it through their parents. So education, and I say persistence, just staying with it. It's not, as you know, it's not a no work environment. There's a lot of work involved in syndication in terms of finding deals. There is a lot of work. And even if you're a passive investor, challenge the sponsor as to how they're underwriting. What are their assumptions? What are their assumptions for rental growth, expense growth, cap rate reversions, all that stuff. And if you don't know that stuff, there's a lot of opportunities to learn it. Mm-hmm.
So, Randy, how do you like to give back?
How do I give back? I'd say on the professional side, I give back. I'm a coach for Rod Khleif's organization. As I said, I really enjoy that. I make a few dollars, but it's really not my intent to make money doing that. And then on the personal vein, I know you and I share the adoption goal, and so I'm a father of an adoptive son as well, and like to think there's still a lot of room for both.
Nice. Well, thank you for sharing that, Randy, and giving back in that way. And tell the listeners how they can get in touch with you and learn more about you.
Absolutely. Easiest way is probably email. It's first name dot last name Randy.Langenderfer. That's LANGENDERFER at invest-arc.com. And I'm sure you'll have that in the show notes for him too, Whitney.
We will, no doubt about it.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.